The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.
All right. Welcome back to another episode here. We have a fantastic guest with us today. We have Ashley Papa, who is an investment advisor and the director of wealth management at Digital Wealth Partners. Thank you for joining us, Ashley.
Thanks for having me. Happy to be here.
Absolutely. So, most of our audience is going to have, an interest in digital assets. Many people follow along for financial education, business resources. They want to understand how to best position themselves prior to and post price appreciation for digital assets. And you do that for people every single day with Digital Wealth Partners. But I think it would be helpful for people if you could kind of give them a background, like where you've been and how you got into the position that you are today.
Thank you. That'd be great. So, like Jake mentioned, I'm the director of wealth management and also an investment advisor at DWP. I started my career with a subsidiary of Goldman Sachs, the ACO company, as a financial analyst, and that was from 2010 to 2013. Following that, I spent 10 years working in the ultra high net worth private wealth management space at a privately owned trust company, doing everything from cash flow management and debt planning, budgeting to investment management, tax planning, and a significant focus on wealth management, wealth transfer, and estate planning. From there, I worked at two small family offices, so definitely have some experience in that space. And then another high net worth RIA in the wealth management space as well. And then obviously, I'm now at Digital Wealth Partners. So, all in all, about 15, 16 years of experience in financial planning and private wealth management. Along that course of my professional career, I did get my MBA at NYU Stern. So, with a focus on finance, economics, and financial instruments and markets. I have my Series 65, my CTFA. So, definitely a lot of qualifications on the educational side of things. But I would say most of my experience has been with client facing and full scope financial planning.
Yeah, I mean, it sounds like and I know that you have had a very strong career. And I'm excited to have you, as a part of our team moving forward here. Um, so just at a high level, I think, your expertise is very unique. And then also you're able to apply this to digital assets. So, but I think we probably should take a step back for people and explain like what is a family office? And then also, when is that appropriate for people to even start looking at setting that up for themselves and their family and the legacy planning?
Absolutely. So in the industry, I'd say there are really two main types of family offices. One is a single family office, and then another is a multifamily office. I think the names are relatively self explanatory, but just to give a little bit of background there, a single family office would service one ultra high net worth or high net worth family. In terms of where it becomes appropriate, usually I would say if a family has $20 million to $30 million of assets that need to be managed, that's kind of the sweet spot where you might want to bring in a family office. And then naturally, a multifamily office would have multiple ultra high net worth or high net worth families within that same wealth range.
Yeah, I would agree with that. And then there's people are starting to come downstream and trying to democratize access to it. And there's virtual family offices, but it really, economically doesn't make sense to hire professionals to work on your behalf until your net worth is, I'm same as you, 20 to 30 million. And even then it's kind of a skeleton crew. It's not, a full single family office. In my experience working with people that have had a liquidity event, that's really kind of the $100 million threshold where you would, set things up independently. Prior to that, I think a multifamily office makes a lot of sense to be able to consolidate costs and get all of the benefits without having to pony up all that money yourself. Um, like you would for a single family office. And that's what we do at Digital Ascension Group. Digital Wealth Partners is the wealth management arm of that. So I guess, that's been an important piece. There's a lot of different components to a family office. Wealth management and wealth planning are probably two of the main pieces for that. Do you think, your wealth manager could also be like the quarterback across the communications for all those people, or is that tend to be the matriarch or patriarch that made the money?
That's a great question. So, when I think about a family office, rather than just offering traditional investment management services or traditional financial planning, a family office really would act like the true quarterback for all aspects of a client or a client family's financial life. And maybe this term is cheesy, but really they become the CEO of your family and coordinate all of those financial aspects for you to take a lot of the daunting pieces of it off of the table for you and to make really all of your financial life work smoothly and in coordination with all the different hands or all the different parties at the table. And like you alluded to, this can include anything from typical investment planning and management, but to more complex aspects of your life, like tax services, strategic tax planning, cash flow planning, philanthropic planning, charitable giving, administrative aspects of your life, like bill pay, and certainly much more. But that's really why typically the clients or client families that will engage a family office do have that higher net worth that has a lot of those complexities that require more than just one individual advisor, but a lot of different parties coming to the table because it really is beyond the scope and ability of any one professional advisor.
Yeah. I mean, you and I both probably sit in a unique position where we're we know a lot about a lot of things in that arena, but I think even you would suggest that you want experts running those different components of your life, and then I've seen matriarch and patriarch people that have, they want to be that CEO, step into that position and run that across all of those professionals. But at some point, it does become very overwhelming, and if you don't have, the full attention or bandwidth to consistently watch that, it's probably better to hire somebody in that position. So
Yeah.
go ahead.
Yeah, and just one thing that I was going to say there is what I've seen a lot with some wealthy families, it might be business success. And like you mentioned, there can be a liquidity event. A lot of times I've seen families think that maybe being a CEO or a president of a company can translate into being that CEO of the family or the coordinator of all of the different parties, but a lot of the times it's not a one-to-one translation or it might work a little differently or there might need to be maybe a softer side of things because you are working with family members. And so having that team who can give some perspective outside of just running a business can sometimes be helpful to make things more efficient and also just kind between family members and a warm environment and safe environment with thought leadership amongst different parts of a family's life.
Yeah. Oftentimes I'll see, we'll get into kind of mission statement, core values, and family charter, which is the most important thing when you're first starting this out. But um, in that, a lot of times I've seen people do a financial committee, which will be kind of the wealth management component, and then they have a family board, and they leave the majority of the financial decisions up to the managers that have high qualifications that have been doing it for years and expertise there. And if anything's outside the swim lanes that they designated for the investment thesis for the family, that kind of reverts back to the board. And that also provides that buffer where just over time as your family grows, there can be differences of opinion, and you probably need something to keep there from being additional frictions that could cause the wealth of the family to be diluted or some party or family member deciding to be malicious against the other people involved. So so circling back to the uh, family charter or the family compass, we have a lot of people that, we work with 10 family offices now. We consult on their behalf. We have a lot of clients that are, I'd say, high net worth individuals that own significant allocation to crypto. As these assets appreciate, what is the kind of order of operations if somebody wanted to progress down this path look like?
Yeah, absolutely. So I think making sure that you have the right structures in place up front is essential to having a goal based or successful plan when price appreciation comes into play. And so, with most of our clients, we think about not only the structures, but the safety related to the structures, privacy, protection from creditors, and then also down the road, potentially having control of these assets if something was to happen to you down the line or you were to become incapacitated. And so, from our perspective, certainly financial planning will come into play to know what you want to do with these assets when they appreciate, how you're going to use the wealth. But upfront, I'd say creating some type of entity around the digital assets that you have. So, whether that's an LLC or holding it outright in a trust definitely important to have so that the assets are protected when they are worth more. And so most of our clients, I would say, would establish an LLC first, just holding their digital assets. One, for tax efficiencies, so that you can treat the assets, if there's any income or expenses, treat that in the right way from a tax perspective. Certainly having that wrapper around the digital assets so that they have that creditor protection. And then also sometimes creating a trust around the LLC so that, like I mentioned, if something was to happen to you, you know how the assets will be controlled at the end of the day. Having those entities set up to begin with makes you or puts you in a good position when there is price appreciation, that you already have that protection, the established goals, and control over those assets.
Yeah, no, I love that, and it is a commonality across most of our client base that they choose to go that route. And then people that have larger allocations tend to do, maybe even a little bit more complex estate planning up front. And,
Yeah.
and I would say that this is probably different than the majority of other asset classes because of the speed at which things appreciate in digital assets. Are there any other asset classes aside from maybe private equity that you think garner the same type of precaution, or somebody being as proactive as we see with our clients?
Private assets would definitely be a place where I would say they would want to have similar structure set up, or the same type of protection. Probably if they have some type of business, you would see similar protections put into place there, and definitely some complex planning. But I would say it's mostly in the private asset and digital asset space that I see clients really add a lot of protective structures around what they have. Another space where you might see this come up relatively frequently, I would say, with real estate. I often see LLCs or trusts created to protect some real estate, add privacy around real estate, create ways to avoid probate, because those can be relatively large assets. I think in any sort of space where something's potentially illiquid, or could significantly appreciate in value, that's really where you would look to do some of this complex financial planning, whether it's just creating protection around the assets that you have, or creating an estate plan so that you either move assets out of your estate during your lifetime, or you have a plan for the flow of them after your passing or after your incapacitation. And so I would say that it really is centered around appreciation that you'd expect in the asset, creditor protection, illiquidity of the asset. And I would say that those are kind of key components that I look at when thinking about what type of complexity an estate plan might need.
Yeah, no, I think that makes a lot of sense. And before you set these structure up, I think these ones that we were discussing now kind of give you the most flexibility post price appreciation, and that's a good thing, right? Because you're already ahead of the curve, and now you have this flexibility. I've seen this happen, unfortunately, where people get aggressive early and set up more complex structures that don't align with their goals and objectives over the long term, or maybe maybe they change, right? Like maybe you get married and you have some kids, and you didn't think you needed a legacy plan, but now your trust doesn't accommodate those things. So, um, in order to mitigate that, do you think it's better to just kind of have these basic structures and then work through, that family charter before you do the more complex estate planning?
I think you can almost do them one in the same. So there are a couple different things that I would think about here. Obviously, first and foremost, make sure you speak with your financial advisor before going into any of these conversations with estate plans, or even sometimes with your CPAs. I've found throughout the course of my career that having initial conversation with your financial advisor just to lay out your goals, not only during your life, but certainly as you consider a legacy, are incredibly important, because then when you go to the table with an attorney or a CPA with some of these ideas, you at least have some structure or plan around it so you can make those meetings as efficient as possible. I think there can be room, especially when you think about an asset like a digital asset or a cryptocurrency. There can be room in anticipation of significant price appreciation to create some more complex structures up front and potentially fund some of those entities, knowing or with the anticipation of price appreciation. So a good example would be something like, and I know you talk about this relatively often, Jake, but with a digital asset protection trust, that's something that you can consider to shift assets out of your estate, because it is an irrevocable trust. But you can also still have, because it's a self-settled trust, you can also have some access to those funds as well. But you do have creditor protection there too. I've also seen some clients set up slats, and that might be a little too aggressive to start out with, but just something to think about in terms of creating an irrevocable trust that you can transfer assets out of your estate during your life, but with the potential, so a SLAT is a spousal lifetime access trust, but with the potential for another family member to still have access to those assets. And I don't want to go into these in too much detail, but just giving you some examples of some more complex planning that you can do up front, especially if you have an asset that you anticipate will appreciate. I also see some clients, and especially as we consider the fact that interest rates will likely be coming down in the upcoming 12 months or continue coming down in the upcoming 12 months. Sometimes clients will use something like a grantor retained annuity trust. And essentially with this, a client would put assets into this GRAT. It essentially works like an annuity. So the grantor who put the assets into the trust would get an annuity payment back based on a fixed IRS hurdle rate, so an interest rate. So as that interest rate comes down, the hurdle rate for appreciation of the assets is lower, which allows more to remain in the trust to continue in the GRAT to continue to grow while the grantor takes back that fixed annuity payment. And so the excess appreciation will just pass tax free to the beneficiaries when the trust terminates. A lot of information there. Don't expect anybody to digest that entirely. The point just being there are different types of tools that you should talk with your financial advisor and estate planning attorney about, even in advance of the price appreciation, because with a lot of these tools, the point is to get assets out of your estate before they appreciate. And so doing some of that planning up front can definitely be appropriate in certain situations.
Well, I just want to touch on the disclaimer probably since you mentioned it. The information in this podcast is for educational, general, in nature, and it's not supposed to be taken as consideration for the listener's personal circumstance. So, therefore, it is not intended to be a substitute for specific individual financial, legal, or tax advice. In order for you to determine which of these strategies or investments may be suitable for you, it's always best to consult with the appropriate qualified professional prior to making any financial decisions. So, you know how it is. We have to let them know, there's all these tools, right? And um, there's a red flag for me is when an advisor seems super hung up on a specific tool and they want to, like, if you have a hammer, everything looks like a nail, you know? I think that we should always, and we do value-based planning. I'm really proud of the culture that we have at our multifamily office, providing clients exactly what they need and not trying to stick them into something that is in our benefit. We always want to sit on the side of the client's table and make sure that whatever we're doing is in their long-term and best interest. But there's all these different tools, and some may be appropriate for some people at certain times and other people at other times. So it's difficult, without specific information or context to give people exactly the best one or the few options that may be the best options for them at the time. Um, you didn't touch on ILETs, but I think, that's an interesting topic, and I don't want to gloss over that one, especially when it comes to digital assets. I think that there's going to be a possibility in the near term, next year or two, where you're able to draw down debt at a fairly reasonable interest rate against your digital assets, and then be able to fund an ILET with premium financing,
Yep.
to be able to, mitigate the tax implications that you would have for transferring those assets in. So that's complex. Again, this is probably a little bit higher level than some people are used to, but I think it'd be interesting for people to go through what an ILET is and how that can be used in their estate planning.
Yeah, and I absolutely agree with that. I've seen, especially in situations, I know I mentioned illiquidity earlier, but especially in situations where maybe a client has a lot of their assets tied up in a family business or tied up in digital assets that they don't want to sell down the road, or any asset really that they don't want to sell. Maybe they have a lot of their wealth tied up in real estate. An ILET can be an essential tool in this case just to provide cash flow upon a client's passing. And again, like you mentioned, very tax efficient, directly to the trust that owns the life insurance policy. So outside of probate and tax efficient wealth transfer there. So I entirely agree that can become a critical piece of a client's estate plan.
Yeah. Well, I appreciate that. We haven't done a ton of those, but again, it hasn't been super applicable for the larger majority of our client base. So kind of stepping back again, at a high level, what do you think the order of operations is? So let's say, somebody has been proactive and structured these things. They are starting to scout other professionals, and maybe look at more complex estate planning. in what order should they go through that for all the different components of a family office?
Yeah, absolutely. Well, the first thing I would say is interview multiple family offices. Sorry, Jake. I know that digital sounds great in digital family offices.
I encourage that. I want people, and the main piece of a lot of the content that we put out is I just want people to be educated and understand these things so that when you're having the conversations, even if you're not going to work with us over the long term, you're not going to be taken advantage of by somebody else. You're educated enough on the topic that you can understand what's going on, even if it is a bit more complex, and make sure that your wealth is going to be managed effectively over the long term.
Absolutely. And so, yeah, the first thing that I would recommend would be interviewing not only multiple family offices, multiple different advisors potentially at the family office, multiple attorneys, multiple CPAs. Definitely ask them about their background, the types of families that they work with. But at the end of the day, you're really just looking for the right fit. These people that you're going to put on your team are truly going to become part of your family. You'll probably talk to them just as much as some of your family members, and they're going to be ingrained in every part of your life. Even though it might start just as financial, it oftentimes becomes much more than that. And so I think the first part is making sure, or the first step is making sure that you create the right team around you and foster a lot of trust and communication and transparency with that team that you build. From there, I'd say, obviously, the closest relationship you'll likely have is with your family office or financial advisor. And I would start with discussing goals. So, obviously, you'll do a lot of fact finding up front, a lot of information gathering, know what types of structures you have in place already, go through your balance sheet, net worth statement, create a financial plan. But it's really going to be setting those goals and discussing different ways that you can attain those goals, whether it's creating a charity or a donor advised fund, a foundation, or making sure that you leave behind XYZ amount for your children, your grandchildren, making sure that you set up some type of trust that's only geared toward education funding or used to create a business for future generations or something like that. So, really, it's getting the right team around you, setting up goals, and then discussing the strategies to attain those goals.
Yeah, I think that's a great order of operations there. And again, it's hard to go through like the exact specifics for what would be appropriate to each person because there's a lot of context that's required for that.
Yeah.
Um, at what net worth do you think it's appropriate for people to start looking at bill pay and concierge service or the philanthropic planning? From my experience, it's been around that $30 million mark on the philanthropic side, because that is going to be the gift tax threshold here in the US in 2026. Between you and your spouse, you both get 15 million. Anything above and beyond that's going to be taxed at 40% on the estate tax if it's passed through. So if assets have appreciated beyond that before they've been put into a structure to be able to mitigate those tax implications, that's where I see people, like you mentioned, a DAF, donor advised fund, or a charitable remainder trust or a family foundation. I think those are applicable there. But on the bill pay and the accounting, like what again, do you think that's really around the $20 million mark? And does it need to be just more complex than just one entity that you're dealing with?
I would say it definitely needs to be a little bit more complex. The bill pay side of things, and this is just speaking from my personal experience, certainly there can be instances where maybe $30 million or $20 million makes sense. Just speaking from my personal experience, I've seen that come into play when there's typically significantly more wealth, when the situation becomes more complex. So looking at the $50 million range, even in some cases, maybe even up to your point of a liquidity event and 100 million, when assets start to transfer from being managed within a business to now being managed on your personal side of things. And so that could definitely be something that comes into play there. But I would say typically it's with higher net worth, so maybe even more than $30 million.
Yeah, that makes a lot of sense. Um, any other components of a family office that you feel are a high level just overview that maybe we skipped over or people should be thinking about as they're going through this?
Yeah, and this is gonna be less on the financial side of things or thinking about just, assets under management in dollars. But I think that when we consider integrating a family office or doing any legacy planning. Obviously, my family's complicated. I think families in general are complicated. So while the structural foundation I think is obviously crucial, I think it's also important to work with families more on the human side of things. And so I think aside from just setting financial goals, it's also important to set family goals. And so, like I said, on the human side of things. So one component of that is really talking to the family overall and defining what wealth means to the family outside of just what wealth means in terms of money or dollars. And so that can be, and I read this book, and I know I've talked to you about it, Jake, before, but I read a book called Family Wealth, and Family Wealth, Keeping It in the Family. And I think that that book does a great job addressing how a family office can help client families structure legacy planning that is considerate of not just that financial capital, but human capital in terms of their physical and emotional well being, how they find meaningful work, how they establish a positive sense of self identity, and how they pursue their own happiness so that they contribute to the family legacy from that perspective. I think another aspect that comes up there is intellectual capital. So, how you ensure that your family has the right life experiences, that you make sure you digest what other family members know before you're taking on all the responsibility of the family. That can be academic, it could be career growth, it could be artistic, it could be philanthropic, but really just making sure that the family's always learning from each other. There's another piece of it that's spiritual capital. That term is can be a little bit confusing because it's not necessarily religious or what somebody's individual personal thoughts are on spirituality, but really it's more about creating a shared dream with the family, and knowing that there are going to be challenges along the way, but that exceed the strength of just one individual member of the family. But instead, when you work as a whole, that's really how the family will find success. And then they talk about a social capital, so just interacting with family members and community in a healthy and productive way. And then obviously we'll always circle back to the financial capital piece of it. But I think having a family office who brings in that human aspect alongside the financial aspect because of their deep understanding and trust that they've built with your family is essential. And then a piece that comes from that, or another step that comes from that, is, like you said, creating that family mission statement, and consider how each different family member's views help create that mission statement and nurture each part of the different pieces of family capital. And that family mission statement, I've seen maybe it is just one statement or it becomes more of a mantra, or in some cases, it could be a page, 2 pages, 3 pages long, where it's addressing explicitly different aspects that are important to the family. So I think that all of those different pieces help create unity in the family. They create trust and transparency and a strong, deep relationship with the team that you built to help with every different aspect. It gives family members a sense of purpose, fosters goal setting, promotes healthy discussions within the family around family government responsibility. And then also from there, I see families often have family meetings. Maybe it's once a year, maybe it's quarterly, maybe it's a broader family, maybe it's an immediate family. But having that family office or financial advisor there to help structure those meetings, to help guide the meetings, to help act as a mentor in those cases, especially because many family offices and financial advisors have experience in this area. I think that that really helps make sure that they're as productive and efficient as possible. And also, I hate to say this, but it also helps with conflict resolution because a lot of times family members only hear what they want to hear, or they aren't really making the connection of getting to that broader goal or resolving an issue in a healthy way. And sometimes having kind of a mediator there to help bridge the gap can be essential to getting to the next step or finding progress in that family meeting.
Yeah. Again, the buffer, right? Like
Yes, exactly.
sometimes you need somebody outside or a third party that's a mediator or a neutral ground, where people can come together and discuss ideas and work through whatever the frictions are to make sure that there's continuity. Like the other thing that one of the main components of family offices that we've worked with, and one of the things that we look at frequently is like long term. I think many people, that maybe haven't managed large amounts of wealth as of yet, are thinking, year, 5 years, maybe even up to 10 years. But at a family office level, it's more of a pantheon, 20, 50, 100 year um, outline of what you want to do across multiple generations in order to be able to preserve and grow the wealth and do the good that you want to in society with the money that you come into. So, any particulars there or frameworks that can help people that you found?
Yeah, no, that's great. That's such a great point to bring up. And I was thinking about that even leading into this podcast. A key to success in multi-generational planning is exactly to your point. It's not in a vacuum. It's not in 5 years. It's not in 10 years, but you're really looking out to a longer time horizon of 20 years, 50 years, 100 years. And I think you sort of alluded to this in the beginning of our discussion. Education is going to become financial education, family education is going to become a critical piece of this because 50 years from now, you're not going to be running a family, you're not going to be running a family business, but it's going to be the generations and the how the family functions that's really going to guide how the next generation handles things. And so I think family education and financial education up front is absolutely critical. I've seen families handle this different ways in the past, but financial education for younger generations, the earlier you can start that, assuming the family's comfortable with it, the better. I've been part of family meetings where we have what we call junior councils, and that could be, ranging from ages 4 to 15, starting with building blocks of financial education like wants versus needs. What is an asset class? What is asset allocation? What is a trust? How does a trust work? What's the responsibility of a beneficiary? And I can go on and on and on about what those different topics might be. But I think starting early, educating the next generation, and then involving them in family conversations once they're the appropriate age is essential to ensuring the long-term success of a family as a whole on the human side of things, but also in terms of fiscal responsibility with the assets that are inherited and how they're used.
I love that. Yeah. I think, you know, transferring principles, core values, and beliefs to the next generation is essential. It's rags to riches and back to rags in 3 generations. There's mantras across all parts of the world that kind of allude to that same situation where the first generation comes from humble beginnings, grows a substantial amount of wealth. The second generation got to see a little bit of that, and so they're able to maintain it. And by the third generation, they become entitled, and they tend to make poor choices and eventually, lose the family's wealth. We saw that with the Vanderbilts,
Yep.
and that's why family office really exists. And there's been the DuPonts and the Rockefellers and many others in the early 1900s that have been successful at implementing this structure to be able to maintain their wealth over generations. Um, I'm going to spin one for you. What kind of separate of the family office topic? What are you most excited about here in 2026?
That is a loaded question, but I'm honestly pretty excited about widespread adoption. And I know that this might sound like a plug for DWP, but I'm being completely honest. This is not at all. I have my background, like I mentioned before, is entirely a traditional asset management, and obviously with a slant toward crypto. But I think seeing legislative adoption, legislative action, widespread institutional adoption, the rollout of these ETFs, an entire change to the financial system and market and infrastructure, creating efficiencies. I just think it's going to be game changing, not just this year, not just, I'm literally getting goosebumps as I talk about this, not just for our generation, but it's going to be like the internet of the financial system. So think back to the 80s and 90s, what happened with the internet. We're in a space right now where that's going to happen to financial markets. And I am just so excited to see what happens in that space and how it translates to even the traditional asset side of things, because it's going to affect every single person, high net worth, not high net worth, invested in digital assets, not invested in digital assets. I think that's going to be the talk of the next 5, 10 years, and certainly the next 6 to 12 months. I know that we have some talks next week in the Senate just about the Clarity Act. So really excited to see what happens there. I believe it's next Thursday. And DWP is going to be putting out just a quick little piece on that after we get some clarity around how that meeting goes. But just really excited to see what happens in that space and how that will change just the entire infrastructure of the system. I'm just really, really excited about that.
Yeah, it's going to be fun to be a part of.
Oh my gosh, absolutely. Yeah. It's once in a lifetime that you come across this kind of stuff or that you get to experience it real time. And so we're all lucky to be in this situation right now.
Yeah, it's definitely a wild time to be alive. And if you're watching this and you have an allocation to crypto, no matter where it is, you're probably um, better off, or at least have a better understanding than the majority of the public on what's actually happening. I don't think any,
Absolutely.
I don't want to say any, but the majority of the public, I think, has no idea that all of this shift is actually going to take place in the near future after this legislation's put in. So,
Yeah, definitely
um,
agree with that.
as people watch this, if they want to reach out to you or the team there at DWP, what's the best way for them to do that?
Yeah, you can go right to DWP's website and there's a contact submission form. And so you can reach out to us that way. I'm always available. You can reach out to our support team as well, support at digitalwealthpartners.net, and they'll get you in touch with an advisor. You can have a complimentary meeting initially just to speak with us. If you become a client, obviously can continue conversations with your dedicated investment advisor, but you can also just reach out to us to do one-time paid for consultations. We're more than happy to do that. On our website, we're adding links to different blogs that we put out, different confirmed channels that are only DWP or DAG or DFO channels. Or nothing, never go to an unauthorized channel, of course, but definitely can go to our website, reach out to us, get in touch with an advisor, and we're always happy to help, whether that's going to be as a DWP client or as just an initial consultation. We're more than happy to do that.
Love that. Thank you again for your time. And those links will be in the show notes below. Hope you enjoyed this. Please like, subscribe, and we'll see you guys on the next one.